Alright guys, welcome back to the channel. So I hope you're all having a good week in your trading so far, whatever stage of your journey you're at. So this video, I want to come at this from a bit of a different angle. And I want you to focus just on where price is likely to go based on liquidity and imbalance in the market. Right, that's all we're going to be discussing. So in the market, right, as we know, we have buyers and we have sellers. So obviously, let's say I want to go long in this market, right? I want to take up a long position, which means that I want to buy, okay? So I want to buy into this market, right? If I want to take up a buy position, right? So I want to buy the pound against the yen, okay? I need someone on the opposite side, right, that is willing to sell the pound against the yen, okay? You think about it like a supermarket, right? Or any type of store. You can't buy something if someone isn't selling something, right? And on the flip side, you cannot sell something if nobody wants to buy it, right? So you need sellers to buy and you need buyers to sell, right? So how we want to view the market is we want to view the market, right? Instead of viewing it as support, resistance, instead of viewing it as price patterns, instead of viewing it as whatever strategy you use, whether you flip a coin, right? I want you to visualize it as orders in the market, right? Where are orders lying? So if we're looking at this swing down here, right? I want you to think about the market in terms of liquidity, right? In terms of resting orders, and where are most of the orders in the market, right? So obviously, look, we can see through here we've got a large area of distribution, right? So we know that there is going to be a large volume of orders all the way through here. We can see that we have imbalance through here, right? We have imbalances through there. We had imbalances through here, okay, which the market came back up to fill, rejected off, which in turn left imbalances there, right, which the market came back up to fill and then rejected off, right? We've got imbalances through here. So as we know, right, these imbalances and inefficiencies in the market are caused when the market drops off, right, and doesn't fulfill all the orders on one side. So we're going to have buy side inefficiencies in the market. So effectively here, right, we've got areas in the market where there's orders that have been left behind, okay? So there's orders that have been left behind through there, okay? On the buy side, we've got buy side orders that are left behind through there, which we've come back and filled, okay? So we've got liquidity through there, liquidity through here, right? We've got liquidity through here, okay? Through there as well, and obviously we've got a lot of liquidity through here, okay, because obviously we understand that there's going to be a lot of buying and selling through distributions, right? Institutions distributing or accumulating positions, right? So we know that there's most likely going to be a lot of liquidity through here. We're going to have a lot of liquidity above here, okay? So instead of looking at it as a push down, a pullback, push down, pullback, push down, pullback, push down, pullback, right? I want you to visualize it of where most orders are lying, right? In the form of inefficiencies in the market, right? Swing points in the market, okay? So we know we've got liquidity above there, we've got liquidity above here, we've got liquidity above here, and we've most likely got a lot of liquidity in this area here, right? So now that we know that, right, we know where price would like to target, right? Obviously, we know that, again, whatever position we want to take in this market, we need people on the opposite side of our order to fulfill them orders, right? So if we want to buy, right, we need people that are on the opposite side that are willing to sell. So I just want to show you something quickly, right? So this is an indicator. And I know there's a lot of people that don't like indicators, but they can be very, very helpful, right? Why a lot of people don't like indicators, is a little bit beyond me. Obviously, I can sort of understand. I think that you can get a bit clouded with them and people use them the wrong way. But in conjunction with other analysis and the correct analysis, they're useful, right? You just need to know what they're indicating. They're indicating specific metrics, right? It's nothing, you know, it's nothing sort of abstract from price. Obviously, price is just giving you the price, and it's a visual representation of the participants in the market. But the indicators are just giving you parameters on that price action, right? So like a moving average is just an average of price. The volume, right, is just, you know, the amount of orders in a given period, right? Or the volume of orders in a given period. Okay, so I want to introduce you to the volume profile, right? And this is, we want to use a fixed ranged profile and take it from our swing points, right? So from the top of this swing point to this swing point, and this was the area that we was looking at, okay? And in fact, I'm just going to bring it back a little bit, right? So obviously we can see from this, right? I'm just going to, you know, we can see that this is, there's high volume here, right? Obviously because we had a lot of orders through here. A lot of distribution of orders, buying and selling, accumulating orders, right, all the way through here. So what else is likely to be in this area, right? We obviously know that this was an area of supply which now turned to demand, right? So there was a lot of supply in this area until the institutions were buying, selling, right? And the market started to drop off as the demand outweighed the supply. Right, that there is orders in here that need to be mitigated, right, or unfulfilled orders in this area. So this now turns to an area of demand, right, or an area that we may want to pay attention to in the future, right? So I also want to bring your attention to the areas of inefficiencies in the market, right? So as we know, the areas of inefficiency in the market are here, right? As you can see from the volume, if you look left on the volume, there wasn't a massive amount of volume here, but obviously we know because there was an inefficiency, right? Exactly the same through here, right? Look, there's an inefficiency in the market there, right? An inefficiency in the market there, right? Inefficiency in the market through there, which obviously not so much anymore, right? Because price came back down and we ran back through the inefficiency to fill the imbalance. Okay, this imbalance hasn't been filled. Right here, look, this would have been a lot less. Okay, this area would have been a lot less, but we left some imbalance. We ran back through the imbalance and filled the inefficiency. Right? And the same here, we're going to expect price to want to come back through to fill the inefficiency, right? And let's say that we get some accumulation down in this area. Where is price most likely going to want to head to? Obviously, we know that we've got liquidity below these lows and we've got a lot of liquidity in this demand zone and all the way above here, right? Where are the orders laying in the market? We've got imbalance through here, a lot of imbalance through here. So we can predict that the price is most likely, if we get some sort of accumulation, then we're most likely going to want to come back through, fill this imbalance, and we'll probably see some accumulation in this demand zone, right? So if we just get rid of this, right, bring on the fixed range profile, right, swing low to swing high. Okay, look, went back up, filled the imbalance, right? So we filled the imbalance through here. Most likely got some accumulation on a lower time frame as we've breaking highs, breaking structural highs, right? So you can see we're breaking structural highs through here, filling in imbalances in the market, right? So if we just drop down here on a lower time frame, let's just highlight that, right? So we know the area we're looking at. Just out of curiosity, just want to pull on. So obviously I want you to start thinking, obviously the idea of this video is to start thinking about the market in terms of where are the orders lying? Where is the imbalances? Where's the liquidity? Where does the market want to go to for efficiency, right? So again, anyway, let's just drop down to this to see if we can see some Wyckoff accumulation, right, in this area. Okay, so we'll drop down to the 5 minute. Fixed range profile from there to there. Right. Again, most orders in the market. Areas of imbalance, okay. Right, areas of imbalance. Right, you can see how this is respected, right? We leave some inefficiency, we accumulate, we push up, fill the imbalance, respect that level very nicely, push back up into what? Some more accumulation, right? Or some redistribution, okay, tap into that. Mitigate off of an order block through there, right? If we was to pull again, if we're to pull the fixed range from that swing to that swing, right? Again, look, most orders through there. We push down, pull back up into that order block, drop back down, right? Filling in this imbalance, tapping into this order block, seeing higher prices. Doing what? Filling imbalance, right? Moving towards areas of liquidity, right? Generating more liquidity, running through it, okay? Price is pushing up, right? Filling in the imbalances in the market. Obviously, we had an area of imbalance through here. And look how price reacts there, right? We start to fulfill them orders, right? That were missed last time round, right? So we had an imbalance in the market. We came up, pushed down, propelled price into that area, right? Again, how did we get there? So we made equal lows, right? So liquidity being generated on these lows, sold down into the liquidity, brought up, leaving areas of imbalance, right, in the market, and then filled old areas of imbalance. Why? Most likely to come down to fill this area of imbalance before accumulating long positions to then take the market higher, right? I don't actually know if that happens, but look, judging on price action, that would most likely be the case, right? Or whether or not we do this after the redistribution or the distribution, right? Again, to be fair, that actually may have happened there, okay? So that you can see the liquidity generation, the run through that, a push back up to take the liquidity from the top side, some mitigation, and then bang, right? So if we bring on the volume profile, right, and we go from there to there, okay, look, you can see less volume in the market, right, leaving imbalances, okay? High volume in the market, or more so, right, look, through there, okay, this distribution, or reaccumulation, I should say, sorry, reaccumulation inside of this old area of imbalance, right? Bang, higher prices, right? Now we're in that old demand zone, okay? So how is price going to react in this zone, right? Obviously, there's most likely going to be unmitigated orders. In fact, I can see an order block through there already, right? So again, accumulating positions, bang, lower prices, right? Where do we come to? This area of imbalance, okay? Fill the orders inside of this area of imbalance, right? And again, the market's fractal. What are we most likely going to have here? That is most likely going to look like this on a lower time frame, right? So if we drop down to our 1 minute and just have a look at what happened there, right? Our sell through, our automatic rally, right? A test. Higher prices, right? So again, price just moving to areas of liquidity to fill the liquidity and then moving off to other areas, right? Literally just bouncing around, taking orders. Viewing the markets in terms of areas of liquidity, right? Where are the orders laying in the market? Where does price want to go, right? So again, now look, so if I just get rid of all this, right? Get rid of that, get rid of that. So we did this swing point, right? We pulled the volume profile from that swing point to that swing point. We've now got this leg here, right? So if we just pull the volume onto this leg, right? From that swing to that swing, we can see that high volume through there, high volume through there, and you know, you've got some moderate volume through there, right? We've got inefficiencies through here. Right, you've got inefficiencies here as well. Let's just get rid of that and call that one large area of inefficiency, right? We've got inefficiencies under here, okay. We've got areas of inefficiencies through here as well, right? If you haven't seen the video that I did on imbalance, take a look at that. It will help you more, right? And you could also actually argue that we've actually, this is now a area of reaccumulation, right? As you can see, look, we pushed up, accumulated some orders as the volume increased. We pushed up through it, right? Came back down, touched the top of this imbalance, bang, okay? So now how is price going to react, or where does price want to visit on this move down? Right, obviously we know that we've just tapped into an old demand zone, okay, through here, right? And we've started to see some accumulation, right? We've seen a strong push up. If any of you are familiar with Elliott waves, right, we've had our three drives, right, started to accumulate, and we've started to see a drop off, right? Where does price want to come to? Obviously we know that we're most likely going to want to come back up to fill this imbalance. We could see a push down into this order block and see higher prices completely and just leave this area imbalanced, right? Or we could see some sort of redistribution from here and a push down through this imbalance, maybe tap into this demand zone here, maybe get some accumulation before seeing higher prices, right? Can't actually remember, obviously this is replay mode, I can't actually remember, but I'm just sort of showing you, it's an example, right? I can't remember what actually happened. So don't properly feel that imbalance, right? I mean, you know, it's not going to be quite exact. Get some reaccumulation on that demand zone. So let's just say this has been filled, right? Take that off, say that's been filled. Fill that imbalance, okay, tap into this old demand zone. Oh. Just bear with me on this, right? You will see the benefit towards the end of the video, right? So let's just say we've accumulated orders through that. And we've started to see some Wyckoff in this area, right? And started to see some higher prices, okay? We're breaking structural highs, right? Again, what have we got above here? We've got liquidity, resting orders, areas of imbalance, right? Areas of imbalance through here. Okay, where did price come back up to? This area of imbalance. Accumulated, where did it accumulate? On this redistribution, right? Reaccumulation, sorry. Getting confused, getting all muddled up today, right? Giving us a demand zone. Seeing higher prices, taking liquidity, filling imbalance, right? Taking liquidity, filling imbalance, okay? So if we just bring on the volume profile, right? So we've done that swing, we've done that swing to that swing, right? And now we're starting to move up through this swing. Let's just bring it on again, right? Take it from this swing to this swing. Right, what we got? We got an area of imbalance through there. Okay, so again, like I said, it wasn't completely filled, right? So we have still got that area of imbalance through there. Probably would have had some imbalance through there, as you can see, but what did price do? We came back up to fill it, right? Filled the inefficiency. Came back down. Again, low volume here compared to this. However, this is probably giving us a bit of a mixed signal, right? Because we've had quite a lot of volume through here and then we shot off. So there most likely is imbalance through there, or was, as you can see, that it just got mitigated, right? Or filled. Okay, and we've got where is my demand zone through there? Okay, got a lot of orders through there, and again we got this demand zone through here, right, with some inefficiencies. Okay, so as we're pushing up, fill the imbalance. Tap back down into this demand zone, and that's where we are now, right? So what can we assume, right? Obviously we know that we've got this area through here that we've only, you know, we've just accumulated some orders through. We've got buy side liquidity above here with some imbalance, and we got sell side liquidity through here, right? So from this, I'd expect personally to see higher prices, right? Taking out this buy side liquidity and then potentially seeing a drop off. However, we have broken this structural low, right? Or this protective low. So we may start to take out the liquidity from the downside. So this is a position I'm actually in at the minute. I'm actually long from down here, looking to take out these highs, right? Obviously I'll be, let me just get rid of some of this and I'll show you the entry into the trade, right? Okay, so again, we're in a higher time frame order block, right? You can see that we've got lower lows on price action, right? Higher lows on the RSI, okay? So price diverging from the RSI, right? We've got some accumulation inside of our old demand zone. We understand that we've got liquidity above, right? We broke above, came back down, tapped into that order block, right? Giving us a nice entry on a lower time frame. It was around about, it was a London session, I'm pretty sure. It was around here somewhere, right? Got involved somewhere around there. Targets below them lows, okay. Target one's at a 2-to-1 on the hourly. Because it nearly took me out there. Obviously I was looking for these highs to get taken. Okay, but you can take extended targets up to that, up to this buy side liquidity up here, right? Right, so I just want to discuss. I want to talk to you about this trade here, right? So this is something you could have got involved again. So this move here was the NFP, right? So that's the trade I'm in at the minute. Nearly hit target ones on Friday, and then we just sort of like rolled down, and then we've hit this. So this was on Friday, right? Non-farm payroll. Okay, so basically what happened here, right? We had this area of accumulation, right, through here. Obviously we all understand that. I'm not going to go into too much details about that. Area of accumulation, leaving behind this high, like if we just bring on, where is the volume, right? Leaving behind an order block through here, okay? Where we saw this push up and a sell down through that last bit of liquidity, and then we started to generate orders through here. We pushed up above the structure, came back down to mitigate, right? Breaking structure, creating these trend lines, right? Which we then broke down through, tapped back into the order block, right, on the NFP candle, and then bang, saw higher prices, right, from that. Sometimes you can use the news as a catalyst into trades, right? So my theory on this move, and it is just a theory, right? Because obviously this was the NFP candle, right? And we saw selling, bang, buys straight from this order block on the news release. Okay. Now I don't recommend. I mean, you can do what you like, right? Obviously, this isn't financial advice, but for me personally, I wouldn't want to get involved on the NFP, right, on the news release, even though it looks it looks quite predictable, right, from what happened. We came down, we tapped into an old order block, into a supply zone, ran the liquidity from this trend line, right, tricked a lot of traders into thinking that this was going to be going lower, okay, because obviously what have we got, right? We've got structural lows that we broke, right, and we put in a 3-point move, so there's going to be a lot of people selling through here, right? We got 3-point move that broke structural lows, the trend line's been broken, right? We've been pushing up. This on the lower time frame is going to look like a downtrend, right? So we've got people selling till we tap into this higher time frame order block right on time for the news release. Bang, run all that liquidity, right? Come back down, filling in the imbalance, because there was definitely some imbalance through there, right? So as you can see, right, on this candle, if I just delete some of this crap, selling, buy up through all the liquidity, come back down to fill the imbalance, and then we steadily take price higher, right? So if we just drop down, and I'll show you what I mean, right? And notice what happened at the order block, right? So this was what another question a trader asked me the other day, right? About do we always just shoot off? Now it looks like we shoot off from a higher time frame, but in actual fact, right, we push down, we like this move, this accumulation is the short part, is quite prolonged, if you know what I mean. So the buying and selling is like, until we've sort of dried up all the liquidity from the market, bang, that's when the move happens, right? So this area of accumulation, which happened on the higher time frame order block, it isn't just a tap down into it and then bang, a sharp rally up, right? Which was a question that a trader was asking me the other day. Okay, so we actually get some messing around, right, before, and then obviously we get higher prices, right? I lost track of what I was showing you, but anyway, yeah, so let's drop down, look at this accumulation, right? So you can see how a lot of people, let's say that we was here, you can see that a lot of people were most likely thinking this was a downtrend, right? We've been pushing up. We broke this trend line, tried to push up again, right? So getting people, the last buyers in the market, right? So here people are still holding on to this sentiment of buying, right? So they're buying, bang, no thanks, right? Order block, still accumulating positions, tap into that order block, lower prices, right? People are finally getting rid of their sentiment of buys, and they've decided to sell, right? They've seen this push down, right? Starting to sell. People that were early got in there, right? People that are getting FOMO'd in here, right? So we've got liquidity above there from people's stop losses. Got people selling all the way through here, getting FOMO'd in. And then what are smart money doing? Just in time for the news release, right? Accumulating their buy positions, right, on that demand zone, accumulating buy positions, supply and demand in the market swaps, bang, swipe all the liquidity, come back down, fill the imbalance, tap into the order block, higher prices, right? It's literally just a big cycle, okay? I just want to get you thinking about the market in terms of orders, right? Where is liquidity lying in the market? Obviously, price patterns and support, resistance, even Wyckoff, accumulation, distribution, like it's all got a place depending on how you want to trade. But obviously the way that, you know, the point of this video was I want to sort of change the way that you're looking at the market, right? I want you to start looking at it in terms of where are orders lying in the market and where does price most likely want to go based on previous price action and what's happened to go and fulfill them orders, right? Obviously, you know, that's how the markets work, right? It's supply and demand. It's buying and selling, accumulating, distributing out of positions, right? So again, as you can see, right, start accumulating positions through there. Big push up. Again, if we bring on our volume profile, right, go to 1 minute. Right, we can see we've got a demand area through there. And we can see that we've got a large area of imbalance through here. Where do we get a lot of the redistribution, right? Through the area of imbalance. Why? To fill the orders that weren't fulfilled through the sharp move up. Okay. Right, again in the demand zone. Okay. Right, higher highs and price action, lower lows on the RSI. Fill in the imbalance, right? Liquidity generation. Just above our supply zone, which is pretty handy, right? Bang, run that liquidity. Higher prices, where do we come to? Our demand zone, right? And again, area of imbalance through there. Where does price come to? To fill the imbalance for efficiency, right? Liquidity generation down there. Okay. Got demand zone, or a lot of, not necessarily a demand zone, but we've had a lot of orders generated through there. Okay, we've got liquidity being generated through here, so we may see a pushback down, some distribution, some accumulation right before we see higher prices, if this is not already the accumulation, right? Structural highs. I think this is where we are now. Right, even the way price is moving, okay, how is it moving, right? This is what I want to sort of get through to you, right? Look, liquidity generation, right? Liquidity generation, see some accumulation down here, bang, into an order block. So look, you can see that we had higher prices through here, higher prices, sorry, equal highs through here. Right, liquidity generation, a sell up into this area. Okay, come back down, take the sell side liquidity. Some accumulation into this order block. Bang, a sell off. Where did we sell off to? Down to the sell side liquidity. Some accumulation down in the sell side liquidity. Where did we go? Bang, buy side liquidity. Right, filling in balance. Moving towards areas of liquidity, okay? All right, and again, where do we come to? Demand zone, right? So I hope that you sort of understand that. I hope you got value from that video. I hope that sort of changes the way that you view the market, right? So obviously, pull a chart up, start practicing, just forget everything, right, and start viewing the market in terms of areas of liquidity, right? Where are the areas of imbalance, inefficiencies? Where is the liquidity line? Where does the market most likely want to move to, right? And obviously, there's no set in stone, you know, like no one knows where the market is going to go, right? This is just an art and a science that you're going to have to practice and perfect, right? Well, not necessarily perfect, you'll never perfect it, right? But you'll start to get a lot better at being able to identify key areas in the market, right? Where does the market most likely go? When you see like these areas of distribution, right? If you look out for these areas of accumulation, if you look out for these areas of accumulation, you'll probably find them everywhere. But then over time, what ones are important, right? What ones are likely to hold? Which order blocks are likely to hold, right? Which supply and demand zones are likely to hold? It's just if you start viewing the market in terms of where is the liquidity lying, you'll start to, I'm sure you'll have a lot more of aha moments, right? You can see, look, top side liquidity, sell side liquidity, right? Into an order block, take the sell side liquidity, right? Into a demand zone, bang, take the top side liquidity, right? Moving from areas of imbalance through areas of imbalance into liquidity, right? Again, waffling on, right? So again, I hope you got value from the video. If you did, be sure to hit the like button, subscribe to the channel for similar content. And wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.